Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look again at how to use the higher time frame charts to gauge large degree support and resistance. I'd also like to look at how you can use the 3, or if you follow the Russell Index as well, 4 US E-minis together because they tend to follow each other. In other words, they're correlated markets. So I want to show you an example of how we look at that rather than looking at individual markets. I'd like to start with the ES, so that's what we call the boss, because that's the index of the largest one of the stock markets, which is the S&P 500. As usual, we go out to the higher time frame chart, so from the 3-minute we go out to the 15-minute to gauge large degree support and resistance. Before yesterday even opened, which was Monday the 6th of July, so first day back after the Independence Day holiday, July the 4th, and we had a good day yesterday. Remember, we go back to the prior pivot to gauge area of support and resistance. So here you can see we had a pivot swing here. If we right mouse click, place the DP level on. Remember, these DPs are on the chart in advance. So after the market opened, gapped down here and started to rally up, even before the market even got there, that level would have been on the chart. Perhaps if I use our training mode just to show you that. So on our training mode, if I jump back to here, there's the chart as it was just after the open. We right mouse click on the last pivot, and there's the level on the chart in advance. Now if we skip forward, you can see the market was actually rallying up, and then hit the high there perfectly. And if I turn training mode off, you can see that that actually caught the very high of the day yesterday on the ES. So again, these are great levels because they give you areas of higher time frame support and resistance on the chart in advance. If I go down to the 3-minute chart, you can see how that worked even better. So there you go, there is your level on the chart which caught the very high of the day for you. Very nice indeed. So on the ES, the large degree trend was down, therefore you should be looking for sell signals. And there weren't any on the ES. Ideally, it would be nice if we had a sell signal in here, because that could have been a holy grail short trade. On the NQ, let's do exactly the same thing. We go out to our 15-minute chart. We go back to our prior pivot high, which is here. Right mouse click, place DP on. Remember, that would have been on the chart in advance, and that level there, as you can see, caught the high of the day absolutely perfectly as well. If I go out to the 3-minute chart, you can see there it is even clearer. Nails the high of the day, market declines since down after that, so the large degree trend was down. On the YM, you can see we actually did get a TS3 sell in this initial correction. However, on the YM, we didn't quite reach the 15-minute DP. It was up there. You can see we didn't actually quite reach it. In fact, all we did was make basically a double top from the previous pivot high. So this is the example I want to show, in that even though the YM didn't make its decision point support level up here, can you see that? It didn't quite make it. The other markets, the NQ, and more importantly the ES did. So in other words, because the ES is the boss, i.e. 500 index of 500 shares as opposed to the Dow, which is only the index of 30, for more experienced users you could have looked at the YM and said, well, actually the large degree trend is down as well. So this is again an area where the more experienced human traders can look at this and then override what the market's telling you on an individual chart. So large degree trend down from basically a double top on that prior peak. Therefore, this TS3 sell will be a good one to take. If you look at our STF, the STF was actually black stroke red anyway. Let's place the analysis on. Right mouse click, place analysis, and there was our sell setup. For standard traders, you'd have come out on the first target there because the STF was weak, i.e. less than the grey strength band, and it would have been a nice 4.1 hour profit. Very nice indeed. Remember, we use correct position sizing to vary the number of lots, contracts or shares to keep your initial risk small and under control, and that means when you have profits, the profits are much larger than the initial risks. However, for the more experienced users among you, you'll have noticed that because we were deciding that was an important high, mainly because it came in at DP resistance on the ES and also was DP resistance on the higher time frame on the NQ, you may well have decided actually that is probably an important high, therefore that would be the start of a sequence. This would be a wave 1, this would be a wave 2 up into our TS3 cell. Therefore you'd be looking to trade this as a holy grail trade setup and be aiming for the typical wave 3 WPT down here. Now this would have been an absolute massive 11R profit. Now of course you can see the market didn't quite get there. It got oh so close, but not quite. So this is the second part of the teaching I'd like to do today, is that if a market gets close to your target and that target is large, i.e. greater than 5 or 6 times the initial risk, then you want to be a bit more sensible about bringing your stop a bit closer as the market gets to your target. In other words, you don't want to give up a potential profit of around 8 or 9R, as it was down here, just for the sake of the last couple of R profit, which is what you would have done in this example. And this is where it's good looking at some of the other Elliott wave patterns as the markets unfolded. You can see we had a nice start of a sequence here after this ABC setup. Wave 3s tend to unfold in a 5-wave sequence of lesser degree. So if we go down here and we right mouse click down the bottom, we do Elliott wave intermediate, you can see that we had our 5-wave sequence down here. So once the market reached the minimum wave 5 WPT, which it did here, which was pretty close to the typical wave 3 WPT, then I'd suggest to start trailing one tick above the bar high, and that means you would have been stopped out on this bar here for an 8.9 or almost 9R profit. In other words, a very, very good trade indeed. So do you see what I'm suggesting, in that you don't want to be greedy for the last couple of R profit when you're already sitting on a almost 9R profit anyway, just for the sake of the last couple of R, particularly when there are other reasons why the market might be making a reversal. In other words, in this case we actually had a lovely clear 1, 2, 3, 4, 5, and as of this bar here, I'll put the cursor on, as of this bar here we were actually getting a 5-wave sequence, but more importantly we were at a WPT level where the 5-wave sequence was anticipated to end. So in other words, that made sense to then start to trail your stop one tick above the bar highs and come out at that level and put in the bank an 8.9R profit, which is very nice indeed. So today there's been a couple of lessons, and that's first and foremost is that when you're trading the E-minis, if you don't get a perfect setup, for example like here, the high of the day here wasn't quite at its 15-minute DP resistance. If the ES was, and that was absolutely perfectly at its 15-minute DP resistance, and the NQ was as well, then you could decide to take the YM because the larger you trade is down on the other markets. If you insisted on just trading the ES, perhaps start to look at other time frames, and if you go to a slightly shorter time frame, there's your TS3 cell setup. Right mouse click, do analysis. Exactly the same as the YM. Here we were clearly at 15-minute DP resistance. This was in a wave 2. You're then looking to trade down here to your typical wave 3 WPT. The market declines down here. If I right mouse click, exactly the same as I did with the YM, we're at end of wave 5, but again here we just hit the minimum wave 5 on this particular bar, so that is the bar there you'd look to trail one tick above the high. So in this particular example you'd have netted a 7.3R profit, so a very nice profit indeed. So it depends on on how you wanted to trade this, but it was all started because we knew that the market on the ES in particular was right at its higher time frame support zone. Remember, that was on the chart in advance, so you actually knew about looking for these sell setups literally hours before they unfolded. In other words, the high there was what, about 11:15, and this setup here unfolded at 12:30, so you're prepared well in advance before it even got there. So depending on whether you wanted to take the YM on the 3-minute chart, and that would have resulted in a nice 9R profit as it went into the minimum wave 5 WPT there, or whether you'd like to stick on the ES and take its TS3 sell there, and again use the 5-wave sequence to bring your stop a little bit tighter to the market to lock in a 7.3R profit. Either way, you'd have had a very good trade on either the ES or the YM yesterday, and again all set up in advance by knowing the 15-minute DP was on the chart there, and as you can see that now, the high of the day for you. So a good example of using the more advanced tools in the MTPredictor software program to uncover some very nice trades in the markets yesterday.